All right, family, what's the vibes? The title of this video might be funny to you, T.O.Y.M, and it just really means the opportunity you missed. So this is again one of my practices. The moment you get on this YouTube, just know that it is one guy somewhere called Inkami showing you his road to $1 million trading. That's just all you need to just have at the back of your mind, right? I'm going to talk about a lot of things, but majorly, this is my journal. This is my processes, and I've been doing this for years, and it has helped people also become profitable. Just off of watching my videos, just off of doing the things that I do, not even like I'm saying go do those things, right? I usually advise that you go back and check, right? You go back and you put on a skeptic cap and say, you know what, let me actually see if what this guy is saying work, right? And the people that have done that have gone ahead to get funding, gone ahead to make their first four, five, six figures. And this is, what this is about, right? So the opportunity you missed is a weekly journal that I do where I show all of the opportunities that I could have engaged with my model that played out in price for the pair I'm trading, right? So currently I've been focused on gold and a little bit of NAS here and there, but gold has been my major pair. So I do this on gold, and I just wanted to share that. And I think it could be a series, we could do this every weekend, right? Before market opens. I just show you that if you are saying that, there wasn't opportunity or opportunities in the week for you, right? It's probably because you probably need to check again. You probably need to check again because I think last week there were 7 to 9 opportunities on gold. And if you just look at my measure two here, we have one, two, three, four, five, six. So six opportunities. I'm a short-term trader, so you can understand why it's six opportunities, right? But obviously, you don't expect me to take all six opportunities, right? I aim to get three, four opportunities in a week, right? To actually get the results that I want to get, right? I'm currently trading funded. I've been funded 155K in the last 2 months, and that's what I'm working up with. But yeah. So let's actually get into it. Let's get into the video before I just start to ramble and ramble. Right. So basically, I will just be pointing the ideas to you and showing you, what I did. So basically, it's a review of last week's price action. So last week was a very beautiful week because we saw price expand. But before that expansion, I said, if you watch my videos prior to this, you'd see I was talking about gold shorts, right? I wanted to see sell side on gold from this 1 hour OB, this particular 1 hour OB. So I was able to get all of this move down here and then got stopped out here. Right, because I was expecting, lower levels and got stopped out here. I was able to join back, but let's just look at all of the opportunities that were present and all of the opportunities that I missed. So again, T.O.Y.M means to income. Right, so it's for me, right? You can just, get a bit of things from it, right? So if we think about Monday, looking at Monday, right, we had consolidation. This is Asia's high, this is London's high, this is London's low. The way I trade is simple, right? I look for run on liquidities, breaking market structure, and I look for a return back into that range for buys, right? So that's what I like to do, right? It's a very simple process. Now, if you think about this, price takes out London's low, while we have London's high still, untapped. We have Asia's high still untapped. I like these scenarios, and this would have presented an idea for a trade. The reason why I do not have a measure tool here is thinking truthfully, I would have chosen to buy this OB instead, right? You'd see that price moved from this fair value gap. Now, all of this is the OB, right? But me just being truthful to myself, and it's what you want to do every time you are doing your review or your back testing. You want to think about backtesting with your current state of mind and system. What do I mean? Right? You don't just want to say, oh, because price popped into the fair value gap, this is an entry. Right. What you want to say is, what would I have been doing if I was right here looking at price? And truthfully, what I would have been doing would have been, I would have been waiting for price to, I'll have a limit here or waiting to get in manually when price gets to this OB, right? So it's an opportunity, but it's an opportunity that I would have still missed even if I was present. Do you get what I mean? Now, in this case, I was already even bearish, right? Price already tagged my my limit, sell limit, right? And I was already in on this trade for sell side. So I liked all of this move, and all of this moved me back into drawdown. Right. But look how an opportunity here, right? Just short-term opportunity. We had run on London's low, we have breaking market structure, and going into the end of the day, right? Going into the end of the day, we have price return back into this mitigation block. This is a mitigation block to run lower before the run on sell side liquidity and then a breaking market structure. The breaking market structure is what confirms this as a mitigation block. Right now, you can call it order block, and it's also an order block, right? I just like call this mitigation block, right? Because I'm looking at this as the swing. Right? I'm looking at this as the dealing range. So price ran inside of this range, failed to take out this low, is proving something that, okay, the bulls are in control here. And then we had the breaking market structure, right? So that proves that yes, the bulls are in control. So where were the last orders being imputed, right? And it's up here, right? You would have looked at this as an order block if you were bearish. But when other blocks get disrespected, when valid order blocks get disrespected, they become bullish breakers or bullish mitigation blocks. So that would have been an entry. It would have been a clean 1 to 2. Yes, I did not get into this, but it's an entry for the day, right? And I want to have that noted. I want to see that. I want to be able to see how many times my model played out in the week and what I was able to get in the week. Last week was a good week for me because I was able to get most of these opportunities. I had like 3, 4 trades. I had 3 trades, 4 trades even in Asia session, like 4 trades in Asia session, and 3 of them were good. And those were most of my trades. I think one other trade in New York session. And look at this. This was good, right? This was good. If you look at this, we had run on consolidation. This is Tuesday, right? And at 9:30, we saw price take out sell side liquidity. I like this type of moves because it's like consolidation, manipulation, distribution. But look at this, very tricky. Took out sell side liquidity and then ran higher to take out buy side liquidity and then fell off. So, when we're watching this as a team, I have New York's live session with my inner circle Tuesday, Wednesday, Thursdays, and we're watching this, right? And I was talking about how this is good that we took out sell side liquidity and this could triple higher, but because I'm bearish, I want to see price go lower, so I would let it be. So I didn't take any trade here. I was already in a trade here, and it was in profit, but I wanted to see sell side. And it's exactly what I have written here in the journal I have. This is proof that directional bias is king. Takes the low at 9:30 and goes immediately to take the high and fall. So we see run on sell side liquidity, and then we see run on buy side liquidity, and then falls. Now you might say, "Oh, this is confusing," but I did something. I did a little bit digging because it's like it looks the same here. If this is the consolidation, right? And let me take out this so that we see properly. If this is the consolidation here and price takes out sell side liquidity and takes out buy side liquidity, and there's no close with the bodies above any of this. This is the high of the consolidation, this is low of the consolidation, and there is no close above the high or low of the consolidation. What would have been the extra confluence that price is going lower? Now, I saw this. I saw breaker here. Down close candle, run on buy side liquidity, break. That's a breaker. But that would have been one reason price could go lower. But also there's another block here. So this is a reason why price could go higher. So it's like, what else? And then I went into the lower time frame. Now, in going down into the lower time frame, I then found something. This is why in your in the hopes to better your system, which I think everybody should do. There's no end to bettering your system, if that word is correct, right? But if you're going to, have a system that works, you need to have a time frame metric that you work with, right? For me here, it is weekly, daily, 4 hour, 15 minutes, 5 minutes for me. Now I pull through these time frames when I'm, looking for an entry, when I'm trying to, analyze to get into a play, I go through these entries. And this is why it's important. If you look at this from this lens, you would find that when price was taking out this low of the consolidation, we had the bodies close back inside of the range. But when it took up these highs here, we had a close above these highs. Now, it's not a very huge difference, but it says something. Now, the other thing that you would notice here is that after price took out a high, we formed lower high, and break. Now, so here in here is where we kind of have plays, but I had an entry that on that particular day I was watching for, right? And it was this Fair Valley gap. I'm building my muscles on Fair Valley gap, and I was watching with this, but I didn't do anything to it. I just had it marked out and I was looking at it and I saw price, fall off. So this is one to really, really have in opportunities that I missed, right? It was a great trade, right? And even though I did not take this trade, my initial entry from here, which I plan to hold for a long time, really then did well. I think at this point it was reading about 4,500, 4,600, right? And I was able to take 1%. Looking back, I was going to hold that trade. But one of my rules also is that if I see on my P&L money that excites me, then it's time to take something out. It's time to take something out. So I took something out here, 1%, right? Looking back, I would have taken more. I should have taken, a lot more because I lost that 1% back to the trade. So my stops were previous week's high. My stops were here. And if you look at this move that happened is monstrous. So it took me out at 1%, which was what I risked on the trade. So here I was already up 4.5 for 4.6%. I took out 1% and then took me out, $1,000 back again for 1%. So I was literally break even on this trade, right? I can't complain, right? It was a good experience, right? Yeah. So let's go on. All right, on Wednesday, what do we have? So now on Wednesday, I took a loss. Why did I take a loss on Wednesday? Important, right? I took a loss because again, I'm bearish. Imagine I was already running, 4,005 or 6 here. Around this point, it was around 2,000 or 3,000 something. So I was looking to short. Again, my idea to get into a trade is run on liquidity. What are liquidity points? Session highs, daily highs, weekly highs, monthly highs. So look at this. Price took out London's high and Asia's high. So as soon as I saw this, I'm like, okay, game. Let's see a little bit of down close and then I would sell. So I sold and boom, I got taken out. Right. I had my stops somewhere around here and I got taken out on that move because I wanted to see sell side again. Whatever you apply to your system, whatever you have as a proven, framework that works would fail if price is poised to move in the other direction. If price is bullish and what you want to do based on your system is bearish, your system is not going to then just configure price to move in the direction you want to see. Your system aligns when you are in line with directional bias. And that's why you need to have the higher time frame bias in mind. We have to think about the higher time frame bias. If we go into the higher time frame, we would see why that makes sense. We would see why the bias actually makes sense. We're returning back into the discount part of this range. Low, high, and discounts. Now, did I see this? I saw this, but because I was bearish, I had to ignore the fact that this was a bullish order block and I wanted to see it get disrespected. If you have traded for any length of time, you understand that this is what you do every time you take a trade. You would see reasons why the other side can work, but you have an edge and your edge is pointing you to one direction over the other direction. And you need to ignore and you need to say, okay, yes, I see this, but bullish order blocks also fail when we are bearish. When we are bearish, there is an if and then condition to that. We're not bearish. So we had our run higher. Now, if you watched the review I did on Monday, the market outlook, I said the moment we take this high, then I'm already bullish. Then I'm already thinking about buy side for this asset class. So I was thinking that. That didn't mean that I sold. I asked my guys just the day after that, how do you guys feel when you actually, and I'm going to ask you the questions, like, how do you feel when you came into the week with a strong bias? This is not a week where you are thinking about, oh, bullish or bearish. Like, that, oh, okay, you want to be selling like I did here, right? And now you sell, you have your validation points and it gets disrespected. How do you switch to buy side? Do you have, because I do have that feeling where when I switch or when I know that it's time to switch, just switching in doesn't just go. Like, I don't just ease into switching in. It's like, you know what? I still want to see some type of sell side, even though I've been invalidated, right? And it's just how it is for me. And I will tell you that I struggled with that a little bit. I struggle with that. Like here, let me show you. This is what I want to show you. On Thursday, right, in New York session, in Asia session, I posted this trade, some days back, right? I sold. Why? My idea for the week was bearish one. I think that's the big reason. So I'm comfortable with selling because I came into the week to be a seller of the market. Now, I've been invalidated on the sell idea for long-term movements, but I'm still comfortable with pushing the sell button. This way I'm trying to explain. Right. So again, I played my model rightly still, right? I still have to do that three-step process. We took out previous day's high, we took out Wednesday's high, and then we broke market structure on the lower time frame. We returned, and I was able to sell this. And I was able to do this for a 1 to 4.3. It was a beautiful trade. And this was one of the Asia trades that I posted. Right? I was able to take partial somewhere around here and then hit TP somewhere around here. Right, coming into the New York session of this, and this is one of those trades, right? So it's a very good trade. Let's see if we can go into the 5 minutes and actually look at that. Because I want to really show you these opportunities. And like I said, these opportunities are just opportunities that fit my own model, right? This can really, really, be a charge for you to start to think about how many opportunities actually plays out on the time frame that I consider my trading time frame. Now, I look for trades from the 15 minutes and I break it down to 5 minutes, 1 minute. That's how I trade. So that's why I'm going to the 15 minutes to kind of like build the idea because that's where the ideas are being built. Now, look at this. We took out, New York's launch high, right? And then we get into Asia session. Asia session, we already broke market structure. We closed below this low with consecutive candles. And then we return back into premium, fair value gap, order block. And we break again. That is confirmation for me. And we break again, right? As we're returning back into that OB, I sold, right? I sold the Asia session. The time also was right. It was 21 o'clock on the dot when price was returning back into that level. So I sold that. Just macro time, everything was just aligned. And then I was able to get that move. Now, remember that I know that we are not bearish long term, but I was still able to get a bearish play. And that's why if you still see anybody arguing with you that, oh, why are you buying in a bullish week? Why are you buying? Why are you selling in a bearish? Why are you selling in a bullish week? Why are you buying in a bearish week? Right? The person really doesn't know how to trade because you can make money even if you are not in with directional bias. And this is just proof here, right? There's a lot more deepness to understanding price than just looking um for just than just looking for black and white. This is how it happens. No, 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 there's a whole lot more that happens, right? So but look at this, right? I was looking at this going into New York session. I got this trade. This is a good lesson, right? I was looking at this to sell. Again in New York, in New York session, I was going to sell this. Now, the reason why I didn't sell this was I was excited about this money I already made, right? Going into that day from Asia session, I held it all into going into New York, right? And I got TP here. So I just got TP, right? And I was thinking of selling again. I'm like, maybe we actually just needed to take back our liquidity and we're going lower. Now, this is a function of what I just talked about earlier, where because you came into, the week with sell side, it's kind of like you are held bound to that position, except you break yourself free. And this is why there is no perfection when it comes to trading. It has to be you saying, you know what, this is what I think, this is what I believe in, and I'm going to put risk that I can manage to it. That has to be the core of your trading. Because if not, you're going to take bets that would not be right. And if you over leverage on those bets and they are not right, then it pulls you into a state where you just tilt and do rubbish. Right. So, but when I was here, I liked the trade. It was high, low, premium to me. So I wanted to sell this, but I didn't sell this because I was excited about this profit. And I did not just feel like putting a trade on. Now, you can call this experience, you can call this luck, you can call this God, because, losing 1% there, would have been crazy. Not too crazy, right? But it would have just been crazy, right? And then, boom, hours later, I saw that, oh, I was wrong on that trying to sell idea because, again, from Wednesday's high, the run into Wednesday already proved that the invalidation for sell side was done. So price was respecting buy side. And I was looking at this trade. One of the things I was mapping out here is the fair value gap we have on the left side of the chart here. All right, that fair value gap is a 15 minutes fair value gap. If you guys want me to, explain anything here in a deeper detail, just comment. I would come back and do a video on that. But there's a fair value gap inside of here. I like it with that OB, so it's a valid fair value gap when when it's with a bullish order block. Now price bounces inside of there, closes through the fair value gap, closes away from it. But look how it returns back into it. Again, like I told you, I'm learning fair value gap, so I had to mark that out as something to pay attention to. That was a good trade, right? It has a good risk to reward. Also, 1 to 3, returning back into this high. This is also a buy model. When price is bullish, you see a lot of buy models, right? This is crazy. We're going into Thursday, we're going into Friday. So this was Thursday, and then price just consolidated. Now look at what happened again on Friday. On Friday, I tried to sell. On Friday, I tried to sell. I didn't even just try to sell. I sold here, and that's the last video I have on the YouTube. Right. I sold this order block. Why? I looked at this as a run on buy side. I looked at this as a breaking market structure, and I looked at the run back into premium as a point to sell. And I put my stops above here. The moment I got into that trade, I felt it that this was not what I wanted to do. I was looking at that mitigation block as a sell, and I had my stops above that high. Right. So I made a bet myself, right? It was a tiny trade because of the conviction on the trade was not so there. So I put in 0.5%, right? And I sold from there, right? So as soon as price was here, I said to my friend I was on the call with that, I don't like this position. And what I would do is if we take out this high, I would buy this level as a mitigation block. This is a very important lesson. Mitigation blocks have saved my ass this year. And I'm just really excited for, how I'm able to spot them out, how I'm able to use them. And I think it's very easy. You just need to really just, think about them how they are. And again, the way I think about mitigation blocks are simple, right? I'm looking for a retracement that gets disrespected, right? So this is, or let me say it like this. I'm looking for a retracement. Yeah, it's a retracement. So price is going higher, right? And then goes lower. And then this is a retracement that then gets disrespected. So I don't know what I'm saying like that. Retracement that get disrespected because it's actually a retracement would always get disrespected because it's a retracement, price will actually go back to this high. But what I'm saying is I'm looking for price levels that fail to take out obvious levels of sell side liquidity. If you look at this low, this is an obvious level. Why did we come all the way here? Let me take out this guy so that you see, or I should just close this. Why did we come all the way here and did not take out this low? Now, so when I see this, I look at this as a failure swing. This is what I was watching that made me say, you know what? I don't think this is a good trade. So when I looked at this low, and price came very close to this low. Every low and every high has sell side and buy side liquidity. Why did we come very close here and did not take it? It's showing something. It's showing strength. Remember market structure 101, bullish market structure, higher highs, higher lows. So price will protect old lows. Oh, so we're protecting old lows. That means there's bullishness lurking somewhere. So the moment I saw this run, so that's the next thing I think about when I'm thinking of mitigation block. I look at the failure and then I look for a breaking market structure. A breaking market structure is simple for me. I want to see consecutive candles, meaning the same candles following each other, closing, the body is closing above an old high. The moment I see that, I know what I want to do. So the moment I saw that, I set up my measure to, right, and my trade up, right? So returning back there, I took the trade. I was buying these highs as mitigation block. The high before the run lower that failed to take out this low and then the breaking market structure. I'm buying that level. And then I want to see price hold this low. Why? Because in a bullish market structure, price should not take out old lows. So pretty trade. So yeah, this was one of the most exciting trades of the week, right? And I was able to get a 2.5%, on this. It was exciting. It was very exciting. I slept somewhere around here and I woke up to money here. So imagine that. That was really good. All right. So that is trade 5, right? And finally, trade 6. I really do not know about this. I wasn't even watching price. I was already filled for the week. So I'm like, you know what? Let's just get it on. Right. But I wanted to mark it out because if we are bullish and we see breaking market structures, the down close candles before those breaks are important. So that's what I was looking at here. Right. The bullish OB, right, and the run down here. Right. That's a trade right here. Right. The trade idea is, why did I mark that point out? But let's just use this, right? This down close candle before, the break, right? That bullish order block, and then, just having stops cover that would be trade six. So if I was looking at that, that would have been, a good entry. Now we have started the week already, right? And tomorrow I would have the video out for the market outlook. If you want to be in the free channel where I post the videos of the market outlook. I will be posting it somewhere here so you can, just look over it and see what we have for the week. This is not financial advice again. This is just me sharing my thoughts and process. And I hope you enjoyed and learned something from this one. Bless up. I would see you in the next one.